Hey guys, what's up? This is Francisco with Valareso Capital, and in today's video, we're gonna go through the market update. We're gonna do a review of the market. I think it's really important for us to understand the importance at this moment in time of the dollar, also the TNX. We're gonna go through bonds, through the TLT, and then we're gonna take a look at the indexes. Some of the indexes that I wanna take a look at include the Dow Jones and the IWM, and of course we're gonna go also through the put call ratio, and we're gonna take a quick look at the net lows and net highs of the Nasdaq Composite. That way we can have a broad kind of a broad understanding of what the market is trying to tell us. Remember that there's a lot of people right now that are leaning to the bearish side, and of course the bearish side has been the side that has been paying the most throughout this entire year. But we have to understand that when there's a lot of people on one side of the trade, the market tends to move to the other side of the equation. What is that? Well, the market is just a filling order machine. So remember that the market tends to seek liquidity, and when there's a lot of people on one side, there's no one else to sell or to buy, so the market tends to move to the other side. So I still think that the market is pretty bearish. I don't think that we are out of the woods, quote unquote woods, because there's nothing wrong with the market being bearish. It's just that we have to understand what is the path of least resistance. However, given the action of the past 2 weeks, in which the bearish side has paid substantially to anyone who has been shorting, I think that right now is not the optimal place where we want to place new shorts. I don't think the market is going to crash or anything like that, given on the information that I have seen and the structure of price action. So if the market decides to continue lower, I think that we're going to probably see that perhaps we're going to see a significant bounce first before we continue to move to the downside, if the market wants to continue to move to the downside. So remember guys, that this video is for informational purposes only, and that everything is just based on my personal opinion and is not financial advice. So first of all, let's start with the UUP. I think that this is a very important chart right now. A lot of people have been talking about the dollar, the strength in the dollar, how it's bearish to equities, and all that kind of stuff. And yes, most of the times when we see some strength in the dollar, in this case this is the ETF, the UUP, we tend to see some weakness in the market. Remember that that's not always the case. Given the circumstances that we have right now with the Fed increasing the interest rates, hiking the interest rates, and that situation with the economy, we have now a very strong correlation between the dollar and the equities. But don't get too married to this idea, because when we see a pivot in the Fed, I don't know when it's going to happen, but it's going to happen at some moment, then we're not going to see that same correlation with the UUP. So don't get married to the idea that if the UUP is up, the indexes are down. That is what's happening right now, but it's not always the case. So keep that in mind. So first start here with the UUP. And of course, this was a pretty strong move to the upside after this breakout right above 29. We made a pretty strong move all the way almost to 31, which is a very strong move in the dollar. But what I'm seeing right now is that we have a pretty strong breakout. We made that pullback into the rising 21 EMA, which is usually a very strong place to start a bullish position. However, if you have been following my channel for a while now, you know that when I see momentum divergence, I always take a step back. And that's exactly what I'm seeing in the UUP right now. You can see right here, this is my favorite indicator. This is the trend oscillator developed by Sam Shames. And in the trend oscillator, what I'm seeing right now is that we have a very strong momentum divergence. And when a trend is going to continue, we shouldn't see any divergence in momentum, because when we see some momentum divergence, that means that there's not enough strength in the move as there was in the past. So what is my expectation? My expectation is that the dollar is going to pull back at least to this 50 daily moving average. I think that here, the move that we had is just a bounce that does not have the same energy as this one right here. So I don't think that we're going to take out these highs, at least in the short term. I think that first we have to test this rising 50 daily moving average before any continuation to the upside. Why? Because of this divergence right here. Notice how the price, of course, we make a higher high, which is great. But now notice that we make a pretty strong move to the upside, but the momentum, the bounce in the momentum was pretty weak in terms of bullishness. And you can see that this level right here, this 63.53 in momentum, is starting to act as resistance. And this is actually pretty bullish for equities given the correlation that we have at the moment. So what I'm looking right now at the dollar is something like this right here. You can see that here we had a pretty strong move in the dollar, but then we came back to retest that rising 50 daily moving average. Here we have a pretty strong move in the dollar, and then we came back to retest that rising 50 daily moving average. And I think based on the analysis that I'm making using my indicators, I think that right now that we have this pretty strong move to the upside, we have to come and retest that rising 50 daily moving average once again before the continuation of the trend. So given that, if that happens going into next week, I think that we're going to see a rally in equities. How long is the rally going to take? I don't know, but you can definitely use this rising 50 daily moving average kind of as your indication of where the market is probably going to stop into that rally that I'm expecting coming into the next week. So that's going to be what I'm seeing with the UUP. Now let's take a look at the TNX. And the TNX is actually something similar. If you understand what I'm looking at, you can see that here we have the very strong move to the upside. You can see that we make a new high in momentum, which is great. We have that pullback into that rising 21 moving average. That pullback was received with new buyers, and now you can see that we make a move that we actually make a new high in the TNX. But what happened with momentum? We did not make a new high, and let me just draw a line right here so that we can see that in the chart. You can see that we did not make a new high in momentum. And when we don't have a new high momentum should also be making new highs. Same as we saw in this massive rally right here. You can see that momentum was making new highs, was making higher highs and higher lows, because momentum has to move with price, even before price. And right now what's happening is that we actually make a new high, but we didn't do that on momentum. So what is my expectation? I think that probably we're going to retest this rising 50 daily moving average in the TNX as well. And that is probably going to give some room for equities to get a strong short covering rally into the end of October and probably into the beginning of November. So we will have to see that. And then looking at TLT, which is going to look pretty similar to the TNX. This one is not as clean as the other charts, but you can also see the divergence here. You can see that we're making new lows, lower lows, but momentum is starting to make a new high. Well, not a new high, sorry, a higher low. So I think that's an important divergence going. Of course, as long as TLT remains below this level right here, which is somewhere around 107.50, we have to understand that the path of least resistance in bonds continues to be to the short side. And given the correlation that we're seeing right now in the market between bonds, between TLT, TNX, and UUP, we probably need to see TLT having a more strong reversal for us to think that a bottom is already in the markets. But at least in the short term, I wouldn't be shorting right now. We have some pretty strong weeks into the short side, but I think right now we need to give that a little bit of a pause. And these are the main reasons why I think that. So if you take anything from this video right now, I think it's going to be these three charts. It's going to be the TNX, bearish divergence in the TNX, bullish divergence in the TLT, and bearish divergence in the UUP. And if we take a quick look at the indexes that I want to show you, which was the DIA and IWM, you can also see the divergence here. I already have that divergence draw here. You can see that the DIA, right, retested these lows, but momentum is already moving considerably to the upside. And what I find really interesting is that on DIA we have a pretty strong move on Thursday. This was this massive rally on Thursday that we had, and even though we pulled back on Friday, which was expected because we were reaching that second standard deviation, and when we see that move to the second standard deviation, we tend to pull back. So that was expected, at least from my analysis. But what is really important in the DIA is that even though we pull back, we are still holding this 296.39 level. So remember that I like to give you levels in my analysis. This is going to be the level for the Dow Jones, which is the DIA ETF. And I think that as long as we continue to hold that level, which is above the June lows, I think that we're probably going to see a rally into this declining 50. And that's going to go kind of hand in hand with what we were mentioning in the UUP. We are expecting a pullback into that rising 50 in the UUP, and we're expecting a rally into that declining 50 in the DIA. So that kind of makes sense for what I'm looking at. That's going to be the DIA, and then the IWM. You can also see the same thing. You can also see that in the IWM, we actually make a slightly lower low. You can see that we retested these June lows, but look what's happening with momentum. Momentum is already moving higher. So that's what I'm expecting, that this move that we're having right now, we're probably going to see a little bit of chop, but I'm expecting price to come and fill this gap right here somewhere around 180. And that will bring us also to the decline in 50. I still think that the path of least resistance is to the downside. As long as we're below this decline in 50, the path of least resistance is to the downside. But I wouldn't be shorting right now, given the analysis that I'm giving you, that I'm doing right now. So that's gonna be with the indexes. I don't think that we need to look at anything else. I think these are the most important charts right now in the market. And then let's take a quick look at the put call ratio. And what I like to do with the put call ratio, which I find to be really good analysis, is that whenever we have these really strong moves to the upside in the put call ratio, and I'm talking about 1 day spikes. A lot of people look at the put call ratio with just kind of a line chart, and I think that's okay. But I like to see it with candles. That way I can look at those extreme days in sentiment. What is extreme for me? Extreme for me is any move making a new high in the past 25 days of the candles. So that's basically kind of a pivot point. So if I have, is for example, when you look at it, is like, okay, in the past 25 days, what was the high in the put call ratio? Are we exceeding that high? If we are exceeding that high, I usually see that as a stream, kind of a stream reading in the put call ratio, because I think that every year the put call ratio has its ranges. I don't think that is, oh, we're above 1, so that's pretty bearish. I don't see it that way. I think that we have to analyze it in terms of the year-to-date put call reading. So that's kind of the way that I see it. You can see right here that I also marked the pretty strong readings in the Nasdaq composite, right? You can see that here is the put call ratio, and here's the Nasdaq composite chart, and you can see that when we start hitting these pretty extreme readings, it doesn't mean that the market is going to bottom that day, but usually that is the beginning of a bottoming process before a short covering rally in the markets. So that's what happened last time, and you can see that since last time we had these pretty strong readings, I was looking now for something that was at least close to that reading or above it. And that's exactly what we're getting right here, right? This one was close enough, this one was above it, and this one was above it. So I'm gonna mark those days as extreme readings. And that's exactly what we're seeing here. So it doesn't mean that we're gonna bottom right away, but I'm expecting something like this to go on to happen again before we probably see a short covering rally. Is that short covering rally gonna come into that decline in 50 and fail? Probably. Are we gonna see it above the 50? Maybe. So we have to be open to that. We have to understand that right now the put call readings that we're seeing are extreme, meaning that there's a lot of people in that side of the trade, and usually there's a little bit of cleanup before the next move to the downside. So that's going to be with the put call ratio. And then finally, I wanted to show you the net lows and net highs in the Nasdaq composite. I know that maybe a lot of you are familiar with this indicator. This indicator is developed by Matt Caruso. And I just look at the Nasdaq composite. You can look at the Amex and the NYSE if you want it, but I just take a look at the Nasdaq composite because that's the index that I track. And what I find interesting here, of course, we are in a this is a signature of a bear market, and I think that we are still in a bear market. But what I find interesting here that I just want to mention is that we actually had a little bit of a pause, right? Even though we have the Nasdaq composite was down almost a little bit more than 3% on Friday. The net lows and net highs actually they mark minus 81. I think that on Friday it was somewhere around 300. Let me take a look at that pretty quickly. We had 354 and then we had 81 on Friday. So I find that interesting. Net lows and net highs are not accelerating to the downside, at least on that day. So that's probably the beginning of a little bit of a pause before a short covering rally. That's kind of my analysis and what I'm seeing here. And then finally, let me show this chart to you. I think this is an important chart. This is the ISE, the interest rate of the ISE. This is followed by the Bank of America. And what I think that is interesting here, I tend to track this with the momentum indicator that I track stocks. And you can see here that we're making a higher high in these interest rate readings, but we're starting to make lower highs in momentum. This could take months to play out. Oh, I almost dropped this one. This could take months to play out, but I think it's interesting. I think it's the start of probably a major bottom happening under the surface. This could last for a couple of weeks, a couple of months, but I think it's important for us to be looking at that as well. So I think that's it for the video, guys. Thank you so much, guys. Thank you so much for watching the video. I'm pretty sure that this is going to be helpful. I always like to look at the technicals of the market. I like to see momentum under the surface, and I think that's something that is really helpful for us to understand that what is actually happening behind price, because price is the most important thing, but momentum tends to change the structure before price. So once again, thank you guys for watching the video. Remember to like and subscribe. Also share the video so more people can find this video useful, and they can also find my channel and look at this analysis, which I think is greatly helpful for everyone who's trading the markets. So remember also to follow me on my Twitter account, which is @Valareso_Capital, and in that account I share the setups as I see them in real time, and I also post different quotes with motivational quotes and also psychology about the markets and trading. So thank you once again. Have a great Sunday, and I see you on the next one. Take care, guys. Bye bye.